Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today we got a little bit of a green on the board, and what I'd like to talk about is just how the market tries to shake things up. Let's just keep it short and sweet because this is a nice weekend. We've got the Federal Reserve meeting coming up, and so a lot of wacky things can be going on in the market, and we're not really 100% sure which direction things will go because this is an evolving situation. There are many moving pieces on the chessboard right now, and we just have to be open-minded to both ways. Don't be a perma bear and don't be a perma bull. Something that we always say. Just to be a alpha monkey, be a clever little monkey, and try to protect your capital. And if you're hanging on to them, protect your coins. So let's go ahead and just do a comparison of the stock market with Bitcoin back in 2018. There are a couple things that I'd like to point out as we went through this capitulation process in 2018, which, by the way, just because it happened in the past one way doesn't mean that it has to happen in the future that way. But, this can give us some kind of model to work off of. And if you look at my past episodes, you can see why I believe that this is a good comparison for the past. I know some people will say, yeah, but people are expecting what's coming. But the thing is, it's not really about the educated people in the market. The educated people in the market are just a fraction of the market. What these capitulation events are really designed to do is to shake out retail investors and to just get a clean slate to see what people actually value something as. And, so the dumb money is what they want to shake out. The dumb money is who they want to use as liquidity, and the dumb money is who they want to FOMO into any possible bounce. Well, as you can see back here in 2018, we had the blow off top on Bitcoin. The orange line graph is Bitcoin. And, then we had the kind of dead cat bounce or relief rally, whatever you want to call it, and some pity bounces on the Bitcoin chart. And effectively, what happened is that we had this whole zone, which could be just considered the market correction. And you see stocks as well. Stocks also went through this type of correction. A correction for stocks is anywhere between, anything up to like 10%. This was almost, yeah, about 15%. So that was a very strong correction and entered bear market territory. For the stock market, 20% is definitely a bear market. And so they kind of made people believe, well, we're only going down 15%, not 20%. So it's not a bear market, guys. Come back in. And then what did they do? Then they just sank the market by actually almost 25%. Okay. So that was absolutely a bear market flush out capitulation, and the writing was already on the wall. Now, the thing about crypto is so over leveraged that you get these blow off tops, right? There's so much dumb money and so much like risk on money, pardon me, that you end up having these blow off tops and then these dramatic swings in the market. Well, what did we see here for Bitcoin? Of course, this type of fake out was just basically holding the line, making everyone believe that there was a floor of support. And what did they do? They went many months. Oh, this is the floor, this is the floor, this is the floor, this is the floor. Many months of just holding this floor. And in fact, if you look at the price on the line graph, just a second, let me erase that. You can actually see that the price overall was rising. The price overall was rising. And if you were misled by this chart, you would think, oh, okay, look, a higher low, a higher low. Well, this one was just kind of like a double and then almost the same. So look, this price action like kind of went up from here approximately, just using the line graph, approximately 2%. Which is not much, but it's not something that would make you think that the floor is going to fall out from underneath you. Because back here, you had like, oh no, oh no, oh no, right? And then you have several months of, oh, okay, we're slowly rising over time. That's a fake out because then what happens? Boom, capitulation, right? And a similar thing happened in the stock market. Of course, the stock market is a little bit more experienced than the crypto market. And so for the stock market to FOMO in, you really needed some type of an incentive. And so you got these kind of nice bounces, right? Nice bounces. Like a real uptrend was being formed. And this was, and honestly, this was a bull run compared to this correction here. And what this was a setup. Like this was the oops, this was the trigger that kind of alerted smart money that something's going on in the market. The market is reacting to whatever's going on in the world. And then eventually you had your capitulation, which was the last chance for the smart money to basically take advantage of the dumb money. And the capitulation on the stock market was incredibly dramatic. By stock standards. And then the recovery was a V-shaped recovery, whereas crypto had this very slow recovery that took many weeks. And then only when the stock market proved that it was coming back to this healthy ground, then crypto started to, just take steps up. Why am I pointing this out? Because we get bounces. That's the key point. We get bounces. Nothing goes down in a straight line. We get bounces. And just because we get a bounce, it doesn't mean that we're out of the woods yet. That's why I don't want you guys to be too bearish, okay? I don't want you to be too bearish because you're going to miss opportunities like this morning where suddenly everything just registered as oversold and everything decided to bounce at the same time. Is smart money telling us that there might be a little bit of a run before perhaps a capitulation event? Is this some kind of buy the rumor and sell the news based upon the Fed's meeting coming up this week? It could be, okay? Like there could be some shenanigans going on this week. But the thing that I would like you to also notice is that eventually, prices came back in line with the stock market, with the crypto market. So what happens with the stocks is very important for what could happen with Bitcoin. And if you can see that there might be some divergence in the stocks and in Bitcoin's behavior this week or even this month, it doesn't mean that we're fully out of the woods until we get out of the death cross that I was telling you about. Now, again, I don't want you to be overly bearish. If you guys are overly bearish, you might miss a potential run like this, right? You want to get out of the market at the right time. In this case, it was a clear double top, right? And then you had a lower high. And so that would have been a clear indicator just to get the heck out. So hopefully you know that. And if you didn't, well, I'm letting you know. If we have a bounce, be aware of these type of things, both in stocks and on the Bitcoin price, because Bitcoin now follows stocks even more than it did in 2018. So if Bitcoin follows whatever stocks are doing, then pay very much attention to what the formations are being put into the stock market because you could see it happening on Bitcoin's chart next. And sometimes Bitcoin does front run the market, but rarely, and it has to do with leverage usually. And because you get into these like wild blow off tops, and so people just start trying to front run each other and they front run the bullishness of the stock market. And sometimes they also front run the bearishness of the market, right? In their overcorrection. So it is possible to be highly overbought and highly oversold in these type of scenarios and then have reaction rallies where you can actually make pretty good money, right? A lot of alts popped up 5 to 10% since this morning, and very few of them popped up like 20%. And many of them did almost nothing, okay? So just be aware that there could be something brewing, which might be a little bit of a run. And let's go ahead and go over to the Bitcoin chart because I do want to put some context with the current price action, especially as you think about your alt positions. So let's go ahead and turn off this overlay because I don't need it. This is the real Bitcoin chart. Don't need the line graph. And one thing that I've been pointing out here is that we are in this kind of a death cross, right? And what you can see is that we're actually started to break under the death cross, which is defined by the 3-day 250 crossover. See this? The 50s are coming this way, keeping price action down, suppressing it, pushing it underneath the 200 EMA. Let me just zoom out on that so you can get a better idea. You can see during a very healthy bull run, we were over the 50s, which are these blue lines, and then we were way over the 200. But now all of price action is underneath the 50s, and it's even getting squeezed into the 200. And look at this, below the 200. That did not happen summer last year. People are saying, "Oh, this reminds me of July 2021." Guys, this is not July 2021. We have a totally different structure created here. We have this kind of double top. We've had two runs. We're underneath our 200 EMA on the 3-day. And even on the weekly, we are really pushing the limit with this 89. So if I go ahead and just clean up the chart a little bit, you can see that we are still being supported by this 89, which, like one of my friends, Crypto Redo, pointed out, which is this is now acting as our last line of defense. And if you look at my EMA settings, some of you may be interested in that. You can screenshot that. Then you can also see that we have this 100. 100, is sometimes used instead of the 89 by some traders. And you can see we have a wick kind of down there to the 100. But we are losing the 89 MA. So we are underneath the 89 MA on the weekly. And we're very much threatening to lose the 89 on the weekly, okay? So this is kind of like our wick. You see all these wicks? This is kind of like our wick range, the 89 to the 100, approximately, right? Over here, it was a bit lower. And we've just lost the 89 MA. We're in danger of losing the 89 EMA. And then, this last hope is the 100. So this isn't looking great still. Bitcoin is still being suppressed by all of these EMAs being pointed to the downside, versus just these two, which are pointed horizontally. Everything else is pointed down, and it just lost the 89 MA. So what does this say? This says that the squeeze is still on. We're still being squeezed, okay? Everything is still pointing towards this apex, which if we get into this area, and if we don't start getting over this midline, which is 41,000, and I suggested it should be 41,500 just to even begin, but begin to be slightly bullish. And then if you look at all of these EMAs, like you don't get on top of this junk until you're $45,000, okay? And you don't get a new high unless you're 47,000, and then you're definitely safe if you get up to 47. But you need to get even like $45,000 just to get this stuff, all these lines on your side. And everything is against you. This is the weekly, so it's extremely powerful. It's extremely powerful. And we're having a little bit of a bounce today. We went from here to here. Okay. Whoop-de-doo. Like we went from right there to right there. This little tiny distance. We made that little tiny distance. And some alts have just been so oversold that they just popped off like 10, some even 20%, right? Those are your opportunities to trade in this market. You don't have to trade that. You can wait for confirmations like up to $45,000. And then if you get to $45,000, you might as well be bullish because this thing's probably going on another run, okay? And definitely if you get to 47,000, you're probably going on another run. And to be honest, you can make a lot of money on the last two-thirds of whatever the run is, or last half, even if it only gets to the 50s, you know, versus risking all of your money down here. So again, like if you're doing trades, maybe, just you know, a lot of people recommend, using like 5% of your capital, making sure you have at least 20% of your capital in like a tether at all times, and any one trade maybe like a 5% at most. And to be very careful, have your stop losses just in case there is a weird capitulation event, something unexpected. You don't want to just have a sudden drop like we saw in 2018. All of this stuff is looking very weird. Okay, like this stuff looks bad. These EMAs, like again, like people keep trying to compare it to like summer. These like fake traders, they always want to brag about something. They always have to call something, so they just make up crap. It is true that we could get a bounce, right? We could get a reaction rally. We could get any type of a bounce just to kind of punish the bears and something like that. But don't compare it to summer. Summer was a totally different thing. There was tons of free money still in the system. There was no interest rate hikes whatsoever. This was just a free money, generation machine, and this was just a bullish pullback as we went up to here. And then the Fed started saying, okay, we're going to add interest rates. And then the market was like, nope, I'm out, right? So all of these EMAs, they weren't all bound up, pointed down like they were here. They were all scattered. This one was all butterflying up here, right? These ones, look at all of these. The majority of the EMAs were actually pointed up on the weekly, right? They were all pointed up. They were like, hey, let's keep going, guys. Let's keep going, right? The 50, which is kind of like the average one, the middle one is like, hey, I'm gonna support you guys. Let's go, right? And you didn't even wick down to this 89, which was kind of like your last resort. You didn't even get into that, real kind of danger spot of the 89 and the 100. The 50 was like, I'll carry you along. And you know what? That was really a good sign. That was a really good sign for the market. Here, none of that. There's no free money. We're underneath the 50. The 50 is even saying, I'm going to push you down, guys. I'm going to push you down, right? And then, the heroes 89 and 100 are saying, guys, I'm doing all the heavy lifting here. You guys, you other guys, you got to start helping me out. I'm doing all the heavy lifting, and no one is helping out. Okay, like literally none of those other EMAs are helping out. And these EMAs are going to get tired as these ones push down. Okay. So we already saw it on the 3-day, right? We already saw the 200 on the 3-day. It broke under there. It broke under the 200 MA on the 3-day. It broke under the 200 EMA on the 3-day. These are like warning shots, okay? Those are warning shots. But I'll tell you why it's not the worst thing in the world. Because let me go ahead and turn off this, these EMAs because you get the idea. Let's go ahead and put it on the daily because we have different time frames, right? Like we have the daily, we have the weekly, we have the monthly. They can all tell us different things. And on the daily, or let's just go to the 4-hour because I think you can see what's going on here a little bit more clearly on the 4-hour. The 4-hour is showing that we are in this falling wedge, just like we had a rising wedge here. And I posted about this on my Twitter, okay? So I posted about it in my Discord group and also on Twitter. A rising wedge most likely breaks down. And so as we rose in this wedge, we broke down, right? That's why it can make sense to be super bearish up here, especially if you failed to break out. Like most likely you're going to get sent down, like way down. People who are bullish here, like you know, by the EMAs, by the fibs, by the fib channels, by the all of this structure and all of this stuff. Like I don't know, like that was just free money for the smart money in the market. Okay, like this stuff tends to break down, right? There's a tendency. to break down. Fine to be bullish until you get invalidated. But as soon as you got invalidated, and definitely when you started to break down, that was, your warning shot, right? Like this was the last line, and I mentioned, I think I even had a box here, a sell box. It said that's your last line. Get out of the market right there. And I warned you back here, like probably we're going to meet resistance here, but because of all the fibs. And it's true, it worked out that way. But what happened? We put in a new pattern. So once you leave an old pattern, just forget about it. You have to change your mind. You can't just like be stuck on that old pattern. This is a future pattern. This is a projection, okay? So we keep it in our mind, but we don't necessarily think it's destiny. It's not fate. It's just something that we're paying attention to, okay? Because this structure could be being formed, and it's very similar to what happened in 2018. But even for our projections, our attempts to fortune tell, and we're not fortune tellers, we're traders. As traders, we have to look at the price that's on the chart right now. And what we can see is this descending wedge, right, which has a tendency to break to the upside. And that's just statistics. If you break down, 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 eventually you're going to get something up, right? Like eventually the market has to test the upside again. There's just these supply and demand zones, and you just have to test this price. This is all about testing prices in this market action, right? We got to see what can buyers support, what can sellers support, and sometimes they get squeezed, and then so with Bitcoin being at this support down here, where you can see a lot of bounces have happened, right? It would be foolish to be thinking that we're just going to fall to hell right here. Now, it has happened. It has happened, but this was a traumatic event, so I'm just going to discount this one. And this one seemed like it was just kind of back testing this one. So this has now been tested. Maybe we could get something, in this like 35 area. We could perhaps get a wick or something, test that again. But, or, attempt to liquidate people who have their stop losses like down here. And that could be possible. You could see a kind of a fake out wick, just like you saw this fake out wick to the upside. Right? But overall, you're at support, and at support, you tend to want to long, and in a falling wedge, they tend to break to the upside. And so that's the second concept, that at least for today, at least for this morning, at least as we approach the apex of this wedge, you may want to lean a little bit bullish. Right? It doesn't mean you have to be bullish for the big time scale. It doesn't mean you have to get rid of the concept of that potential death cross that's coming up. It just means that until we get to the middle, it just means that there's a possibility that we could break up and maybe even get to the middle of this thing. It would be very bearish if we kept bouncing off the middle of this, because that would push us to the downside. But it would be some kind of hopium if we broke above it and got up to here, and then it would be super bullish if we got up to here, right? And of course, it's 100% confirmed if we got up to here, right? So these are the kind of bullish steps and bullish thinkings that you could also have as you project your thoughts into the future and prepare for possible price action. None of this is confirmed. All of this is just probabilities and possibilities. But um, just like I have this death cross marked out, I also have uh, this bullish wedge marked out, because this thing tends to break to the upside. Now we do have to see if let's turn on the 3-day. We do have to see if this 200 on the 3-day doesn't end up rejecting this price action, because even though I saw the 89 on the weekly, we still have to recognize that we broke down from the 200 on the 3-day. And let me just delete this line because it's the same color. Now this orange line is just the 200 EMA on the 3-day. You have to recognize that this candle has only come straight up to the 200 on the 3-day, and it hasn't pushed through it yet. My attitude about this area right here is going to change if we can get above that. And on the weekly, we are being supported by the 89. Like almost perfectly, we were being supported by the 89, just like right here, right here, right here, right here, right here. Like all of this is being very supportive to us. But on the 3-day, we just have to prove ourselves. We have to get a little bit higher. Let's break back into this area and see if we can't, if we can't get maybe some of these really lower time frame EMAs on our side as well. Right now, the only one helping us out is basically the 89 and the 100, which are basically the same. They're used for the same purpose essentially. But unless you're like specialized trading, but they're basically being like our only real support while everyone else is against us. So again, guys, like this is what I wanted to talk to you about. Like we can have possible bounces in this structure. And let me see if I can get my see if I can get that. There we go. Get that orange line back. If we put on the weekly again, we can possibly have bounces within this structure. And it could be something like this, right? It could be like this. Or it could be something like this. Or we could just like lightning strike up to the top, just like this kind of wick right here. Again, this is the weekly, so lightning for the week. And then the next week could come down, and then we could get on top. It's just there's so many different patterns that could be put in here. And we just have this whole range to play with, okay? Well, still nothing would change. Almost nothing would change for the long-term outlook just if we played around in this area. Okay, like we played around here, we played around here. It would make sense to do it again, right? But do you want to miss trades because you didn't even take any risk while we're at support? And in fact, I'm going to make another line here because I think it's that important to just show the kind of zone, to show a zone that we have. Let's make this one purple because it's the 89 on the weekly. Let me just double check. And here, I'll line it up. So that's our 89 support. Just a little bit more room to play with. And then I'm also going to put this 100 on here because stocks do tend to like weekly prices in these type of scenarios. And Bitcoin's following stocks heavily. Okay, now I can take my EMAs off, and then I can understand that I'm also playing like in this wick zone down here. I really want to be above this orange line, because that's going to give me the most likelihood that I could potentially work my way up. But we're still in this support zone, like this kind of last resort support zone. And generally, you want to long support. You don't want to short support, right? So there's a lot of stuff in this area, right? There's also, these type of horizontals, which we haven't even really, talked about. So there's also these horizontals, and there's just a lot of stuff going on in this area, which could potentially offer some support to Bitcoin directly underneath us. We could potentially talk about some type of diagonals like this as well. Like there seems to be some type of diagonal that goes down through here. Maybe put on a daily. This bottom of this wedge, right? Something like that, right? So there's this some kind of diagonal that we're still on top of. We're still on top of it. And let's see here. And while that's not the most important one, it obviously did constrained price action within this area. And so that means it is an uplifting trend. Okay. And so here we have 1, 2, 3, 4, and then 5 potential trends, right? And supports that can uplift you, right? And these EMAs, which can uplift you in this situation. So would I be short right here? No, no, I wouldn't. I wouldn't. I wouldn't be short here unless we start really getting jammed into these things and we get crowded and starting to get squeezed through them. We're not squeezed right now. This has a lot of breathing room ahead of it. And if we do have a bounce, just to be open-minded to it. Don't be a perma bear. Okay? Don't be a perma bull. Don't be a perma bear. Just be a clever little alpha monkey. And, when we hit that support on this descending wedge, that was a good possible long, especially when we got on top of this horizontal support. And then when we got on top of the 89 on the weekly, and if we get on top of the 200 on the 3-day, I mean, it's just going to be yet another bullish signal that perhaps we could get up here or we could, start walking our way up. And wherever we bump our heads into, we'll have to find out later, right? And in the meantime, our alts are trying to take advantage of this. And if, there may be some kind of losers like Kadena just kind of chilling out here. See what it's doing. But still getting a nice, healthy 10% bounce, guys, right? Look at these bullish drives, right? These drives of bullish divergence on this point here. When Bitcoin found support, Kadena went for it, right? Credo, I mean, here's one of the weaker ones. One of the most weak coins. What did it get? 3% bounce. And we just saw a drop. So, it's not spread evenly in the market. You want to keep a large portfolio of just random coins that, have pretty good backing just to see like what they're doing, Like, this one might be doing nothing, but then this thing, yop, right? Like, you know, maybe this was like your sell zone here. I don't know why I was charting this one. Oh yeah, because I had a perfect signal right here. And then what did it do? Oh here. Oh okay, I already marked it out. Yeah, it did a run of 88. 88 to it did 150%, right? Sometimes you just get these signals on coins, and then you can create a theory. If we come back up and find support, then maybe we'll get another signal. But in general, I would stay away from these lower liquidity coins right now. See what C-Pool's doing. Yeah, another weak one like Credo. But look at this wick. That is crazy, 10%, I mean, if you were able to catch the wick, but most people couldn't catch the wick, right? So, like 1% move. By the time you probably noticed that. And let's see, this Jasmine coin, looking kind of garbagey, but all right. I mean, if you don't count this, well, this one I think has a longer history. This isn't the full chart for it. Render. Nice bounce. Wow, wow. 57%? What the heck? You see, guys, like there are some crazy opportunities. And if you keep your charts open whenever Bitcoin like finds some support and has those heavy support areas, these alts like randomly they take advantage of it. And even if you couldn't get in this one while it was skyrocketing, on the healthy retrace, maybe you could have gotten back into it. And wow, 28% just on the. This is crazy, right? Like some of these coins are doing nothing, like they're just in the red, and then just 1% or nothing. And then some of these coins are doing like 50%. It's like, okay. It can drive you crazy, guys. It can drive you crazy. So just select good projects. Make sure Bitcoin's at support. Don't be over bearish. Don't be over bullish. Just put a limited amount of capital. Protect your capital. Have stop losses. Try to be in those high liquidity coins on good exchanges so that if you do need to emergency sell, they have enough liquidity, enough people buying that that you have sellers, because it would suck if you have a low liquidity coin and like nobody wants to buy, then you're going to get the worst possible prices for it. And be open-minded to potential bounces, even if you're still aware of the risk overall. Okay, even if you're aware that there may be a risk overall. I know I'm repeating myself several times, but you know, just trying to drive the point home here. Let's see here. Total market cap kind of pumping. Alts also pumping. Tether dropping. Yeah, but this could be just a regular pullback. That looks not great. Maybe there could be a little bit of a run here. We are in this kind of resistancy zone here. There's this trend on the Tether market cap where we bumped our head into it here. We bumped our head into it here, here, and here, and we're kind of being sent down again. So are we going to break through this and everyone's going to go back into Tether, and this is just a really temporary pullback? Or is this going to get a hard rejection from this zone? This is just a way to visualize things. You can't really tell because look at what we did here, right? Like same thing. Kind of like this kind of chop with a peak on it, then another peak, kind of a chop, and then pump, right? Just gonna pull back, another peak, chop, and then pump, right? Potentially we could have another pump. We could even go all the way up to here. Like if you really look at the history of the Tether chart, like the percentage that people get into Tether, is on this uptrend. Here, here, here. And then that would suggest that we could get as high as here. There's other stable coins now, so maybe not. There's a lot more coins in the market that people like to hodl, so maybe not. Maybe this midline really is the top, but that still suggests that we would have a ways to go, right? Because this midline has also been a pretty reasonable predictor. And, as I look at this price action, I just don't think that this kind of uptrend is going to be really the resistance that some people might think it can be. It's possible, but this looks pretty weak. We did have a nice breakdown here, and then this pop up, this could be considered an analogy, right, to this movement right here. So this pop up never did come back up. It just broke down to the bottom again. And maybe this could suggest something like this. I mean, just if we're using an analogy. I don't like to do that, but this market is very bot and algorithm driven, so it's possible. And then maybe, this trend continues, and so somewhere up here, right? Something like that. just like we did kind of this thing, and there maybe was a trend like this, right? See that? Maybe we're doing something very similar, and maybe we're going to have a break in the market, and then, we're going to have a chance to bounce in the market, and then get caught off guard later. Just stuff to consider, and again, why you shouldn't be overly bearish, because there is the possibility to bounce. I mean, we're bouncing right now. We're bouncing right now. First thing you want to look for, breaking out of this wedge. You can draw it however you want to draw it. I'm ignoring these kind of like fake out areas. It's kind of like exuberant rounded tops. Those rounded tops always mean you're going back down, like because the price action is getting lower. And so like I don't count these two no matter what. This was clearly some type of fake out. This was obviously institutional candles, just faking people out. Same with these ones. And then this also was very Bart-like institutional, like fake out type stuff, just wicking, maybe stop loss hunting, stuff like that before driving price down. And so I don't really count this price action. Don't count that price action. I think this is our wedge, and we're hitting the real resistance here. We want to see if we can get above that. Use either this diagonal or the 200 on the 3-day as support, and then see if we can take out some of these highs. But yeah, at the bottom of this wedge would have been your nice temporary long position, even if you only thought you could trade just this like microstructure, like that. The bottom of that triangle would have been the place to consider it, and then the confirmation would have been right here when you sat on diagonal support. Pardon me, horizontal support. True support on the daily. All right, and then it's also showing on the weekly quite strongly. You can see that was real support. And so that would have been the perfect place for a confirmation long. And that's why you saw the market react so bullishly, because we hit that support and we started to bounce. And so the natural thought is to carry through until you meet this this structure resistance up here, right? The overall downtrend. If we get rejected from here, don't be surprised. It's very possible that we are just confined in this triangle, and maybe we have to have another go like this maybe, or even like this, something like that, right? Or who knows, we could break down under the Federal Reserve under their announcements. Yeah, this doesn't have to be bullish, but that's why you use stop losses, right? And maybe that 100 on the weekly, maybe that's a good stop loss area. Let's see, where do our wicks go? The wicks can get a bit lower, so see how these ones are trending. Oh, look at that. This bounce also came off of this diagonal, like precisely. So you had an overlap. Just give it a little bit of room to breathe. You had an overlap of your horizontal weekly support, extremely strong, very strong one. And then you had your rising wedge structure, which is fairly strong. It's been holding up all this time. And then you had the this diagonal from all the way back in January, which it bounced right from it basically. This is a bit lower. And so almost precisely from it, it bounced almost precisely. Yeah. I mean, it is precise. Look how pin perfect precise this is. Again, guys, like this is why I use diagonals. I'm not, I don't like them. It waste a lot of time trying to think about them. But I mean, just look how pin perfect precision that is with this diagonal, and that's where it bounced really from. And where did it get its momentum from? Because all the horizontal supply and demand zone traders like came in and said, okay, we caught this horizontal support. And so now you have the diagonal traders and the horizontal traders on the same page. And then the guys who are trading like this pattern, obviously they're in also, right? And so everyone's like, okay, let's do this thing. Let's pump it. And so if you noticed all those pumps today, look, you had 1, 2, 3, 4 major supports, and then you added a fifth once you got up to here. And so you have so much support here, it just wouldn't make sense to be bearish on the market right at that spot. It would make no sense to be bearish right here. And if we can get back up in these zones, let me turn my log back on. If we can back up in these zones and work our way up, then we might be able to avoid this death cross. So far, we're not really doing it. We are breaking out of that triangle, right? But we've done that before. So we want to see like a real breakout. And on the 4-hour, you can see we're sitting on top of that wedge, just kind of like these areas. Let's just see if it's a fake out or if it's real. Gonna just, I don't really know how to draw this one. But let's just say there's kind of a zone in here, something like this, right? Approximately like that. Here, let's give it just a little bit more advantage. Just right up there, right to the top of this candle. So this wick, top of that candle, and then top of this wick. Just form a little zone. And then, maybe we could even come up to this zone, the top of this zone, before we bounce back, just like we did here. Gonna just make this one, let's make it kind of pink, because it's a resistance. And then let's make this one a little bit of a darker pink. It doesn't have to hold. We could just bounce through this stuff. But it is acting as a kind of resistance here, here. This is actually the major resistance because this is our fib. So I am going to make that one a little bit darker. And the more times that we puncture this fib channel, like the more likely it is that we're going to break through. So we might be seeing a breakthrough of this fib channel pretty soon. And if we see a rejection, it's not going to look pretty. It's going to be very ugly rejection. So make sure you have those stop losses. I can't underscore that enough. But don't be bearish at support, guys. Don't be bearish at support. Just have your plan. All right, guys, that was your alpha for the day. Trade safe, stay safe, and happy trading.